Welcome back to another video. In this video, we are going to go over triangle patterns. We are going to break down what are triangle patterns, types of triangle patterns, and how to identify and trade triangle patterns. So first and foremost, what are triangle patterns? So triangle patterns are continuation chart patterns. That basically means that the trend takes a break to gather steam before the next breakout or breakdown. Once again, triangle patterns are continuation patterns. What that basically means is the stock takes a break before it continues making the move up or down. Now, there are three types of triangle patterns. We have an ascending triangle, we have a descending triangle, and we have a symmetrical triangle. So once again, we have three types of triangle patterns. Let's go into ascending triangle. So what is the ascending triangle pattern? So this pattern showcases that there is a certain level that the buyers cannot seem to get the price over, known as resistance. So as you guys can see right here, let me just get this up. You guys can see what's going on. There's a certain level, right, that you guys can see right here, that's known as resistance, right? The supplies level, resistance point, right? Right here, the buyers are unable to get above that point. Now, the fascinating thing about the ascending triangle is what you should notice is, however, every time this level gets rejected, the bulls are stepping in earlier and earlier and creating higher lows. So if you look here, you can see stock goes up, bears reject the price, it goes down, right? It goes down. Stock goes up, goes down, goes up, goes down, goes up, goes down. Now, every time the stock gets rejected, right, you can notice something about the area right here. You notice that the bulls keep stepping in earlier and earlier and earlier. So the bulls are stepping in earlier and earlier and creating higher lows. So the low points are getting higher, as you guys can see with this trend line. That is showcasing that the bulls are getting extremely strong over and over again. Now, ultimately, this pattern is setting up for a breakout on the upside. So what this pattern is setting up for is setting up in a way where the stock goes up, bears rejected. Bull step in, bears rejected. Bull step in, bears reject. And as it gets closer and closer, there is a very high probability that this may possibly break out and make a big move up. That is the ascending triangle. Now let's look at some examples. If you look right here, we have an ascending triangle example. Stock goes on an uptrend, right? Takes a break, gets rejected. Pulls back, buyers step in. Goes up again, gets rejected at resistance level once again. Buyers step in. Now if you notice from 2.2 to 0.4, what happens? Buyers step in higher. Goes up again, and what do we have here? We have a strong breakout. Strong green candle. Nice volume there, and that's a very, very strong move up, right? The breakout happens. Let's look at another example. Same thing here. Stock goes up, gets rejected. Bears step in. Bulls step in, bring the price up again. Price gets rejected. Bulls step in. Now, if you notice something about the bulls, they stepped in higher, showcasing their interest. Stock consolidates, and then boom, strong breakout. Now, if you were to trade this, how would you trade it? You'd look to trade on the breakout and put your stop loss a little bit below. We will get more into this in the upcoming lessons, but the trade idea would kick in after the breakout. Once again, we would want to see a strong breakout, strong candle, strong volume. All of these things would have to be looked into. Now, what is the psychology of ascending triangles? Because like I mentioned before, I want you guys to understand the patterns without just trying to, memorize them. You need to fully, truly understand the story behind them so you can properly trade them. The psychology behind this is that the bulls keep pushing the stock up in the price until they get overpowered by the bears, right? The bears attempt to push the stock down. However, the bulls are persistent and the stock sets a higher low. So basically, stock goes up, gets rejected, right? As it gets rejected, if you notice, bulls keep stepping in higher and higher. So the psychology is that the bulls or the buyers are more aggressive and they keep stepping in as this gets rejected. As it gets rejected, they step in higher and they step in higher. If you notice something, it's not perfect. It's never going to be perfect, but the idea is as this range gets tighter and tighter and tighter, that showcases that the buyers are getting stronger, right? There's sellers here, buyers are getting stronger, but the trade does not kick in until we see a strong break from that point. Next, we have the descending triangle. This pattern showcases that there is a certain level that the sellers cannot seem to get the price below, known as support. So sellers are unable to get the price below this level, known as support. However, every time this level gets rejected, the bears are stepping in earlier and earlier and creating lower highs. Gets rejected, bears step in. Gets rejected, bears step in. Gets rejected, bears step in. What do you notice every time the bears step in? Stepping in earlier and earlier and earlier, showcasing that they're strong. Ultimately, this pattern is setting up for a breakdown on the downside. There is a move here and it breaks down. That would give us a solid entry to take on a short position. Descending triangle example, right? You can see buyer step in, boom, gets rejected. You can see same level, same support area, right? Bounces off the same support area, goes up, gets rejected. Comes right back, rejected, boom, breakdown. Now, if you notice something, you can see that these levels keep getting lower. That is showcasing that sellers are stepping in earlier and earlier and earlier. And once again, when you get a strong breakout, very tough play here, by the way. This candle is very it's very hard to trade it, if you notice that. This would not give me a confirmation to trade this stock. And in the upcoming lessons, we're going to break that down as well. But if you look at just this candle, not really a strong move, right? So I probably wouldn't trade this, to be honest, just because this candle would have thrown me off. But overall, if this was a strong candle, high volume, would have given me a higher confirmation. But these are things that we need to look into, right? But if you look at the pattern, that's the idea of the pattern, where bears are stepping in earlier, they're unable to break the support level, bears overpower the bulls, and the stock tends to go down. Here's another example, much cleaner. Now, if you look at this example, in this example, you can look at the candle. This was a bad breakdown. This was a very strong breakdown. I'll get into that right now. You can see stock comes down, rejection at support, right? What happens right here? Bear step in, bear step in. Buyer step in, bear step in, boom. If you notice something about these levels, you can see these levels are kind of getting lower and lower, right? These levels are getting lower and lower, and they're hitting the same support level. What's at this support level? There's buyers. There's more aggressive buyers sitting here. So what tends to happen is bears take a nice, strong control here and push the stock price lower. Why was this a strong breakdown? You guys can see. Nice candles, nice high volume, solid breakdown. That's what we want to see. Once again, if we were looking to trade a descending triangle, our stop would be somewhere around there. Our entry would be on the break. Obviously, this is something that would have to be adjusted accordingly to the play. This is one I wouldn't really trade just because of the candle. This is one I would trade, and obviously setting your stop loss, making your entry point, something we will get into. But that's something where on each pattern, you have the same idea, but the entry point and the exit point are going to alter a little bit. Here's another one, descending triangle going the other way. Same example here, right? You can see seller step in, but instead of this breaking this point, breaking the support level, what happens? It goes the other way. Can you trade that? Yes, you can trade that. Me personally, I wouldn't trade it unless it breaks the last low. Right, I wouldn't, the last high low right here, I wouldn't get in until it breaks that. But there are times where the descending triangle does fail. So don't think it's always going to work, or any triangle pattern. Don't think it's always going to work. Make sure you have the confirmations. Make sure everything is working accordingly before you take on the trade. And you can see here, it doesn't break. Some people take on the short position here thinking it is going to break, and then it starts reversing. What is the psychology of the descending triangle? So the psychology is the bears keep pushing the stock down in the price until they get overpowered by the bulls at the flat support level. The bulls attempt to push the stock higher However, the bears are persistent and the stock sets a lower high, which is the upper trend line. So basically, bull step in, bear step in, bull step in, bear step in, bull step in, bear step in. Bears are stepping in earlier, showcasing their strength. If they can break that point, there's a very high probability that this stock will most likely go down. Last one we have is called a symmetrical triangle. This pattern showcases that neither the buyers or sellers are in control. This formation is making lower highs and higher lows, and the slope gets closer and closer. The closer the slope gets, that means there is a breakout that is likely to happen on the up or down side. So if you notice here, the bulls or bears, or none of them are in control, right? It forms a slope-like formation where the range gets tighter and tighter. You can notice the range is getting tighter and tighter and tighter. As the range gets tighter and tighter, at times there's a possibility that the stock either goes up or it goes down. Let's look at an example. If you look right here, you can see stock goes up, bear step in. Goes down, bull step in. Goes up, bear step in. The range gets tighter and tighter. The highs get lower and the lows get higher, right? And then the move that technically is supposed to happen can happen either on the upside or either on the downside. That's where we wait for the break. We wait for a strong break. I would wait for the stock to break one of these levels. Just because it gets outside of these lines is not enough. I want to see it break a level as well. So for example, if you look right here, right, you can see there's the symmetrical triangle forming. Rejection, bull step in. Rejection, the high gets lower. Boom, bull step in. Low gets higher. Boom, gets rejected. Right, the high gets lower, the low gets higher. Right, and then what happens? It breaks out. Now, what level do I care about the breakout? I want to see it comfortably break that level. Up until it can comfortably break that level, I'm not getting in. I personally would not get in if it just breaks that level. I want to see it break a confluence point where it breaks this symmetrical, this resistance level, and it breaks this trend line. If it breaks both of these levels, it would give me a strong move. This is the only time it kind of breaks that level, and you can notice if you look right here, a little stop there would be okay. It kind of tested it and then ran right after. Here's another example. You can see, goes up, gets rejected, bull step in, gets rejected, bull step in, boom, strong breakout, volume. You can see the continuation move. Same thing here, entry, I would get in right there. Why over there? Because it breaks the resistance point of the last high, and it's also breaking the trend line. That's giving us a strong entry point. And boom, stop. I would put the stop most likely below this candle, somewhere around there. And once again, we will go over stops, where to put them, how to place them. On every trade, it's going to be a little bit different, but it's very important being able to identify which level to put them in and how to possibly control them. So what is the psychology of symmetrical triangles? So basically, it's a tug of war between the buyers and sellers. As the two lines get closer and closer together, there's a possibility of a huge move up or down. Whoever wins the battle will be the one you want to catch a ride with by entering a buy or sell order, right? So basically, no one's in control. Buyers and sellers are fighting. It's getting tighter and tighter. And whenever you see the move up or down, that's where you take the trade.